Welcome to this edition of Diligence Inside America's Boardrooms. I'm TK Kerstetter, and I'll be your host for today's show. As you can see, we're back in the folds of the New York Stock Exchange overlooking the trading floor, and it's a pleasure to be back and within our old haunts back here in studio. So today we're going to be talking about an interesting topic. We're going to be talking about rethinking the audit committee agenda. And joining me is John Rodi, who's an audit partner and the leader of KPMG's Board Leadership Center. Welcome, John.
Thanks, TK. Great to be here. And I echo your view of being here in person. So great to be here with you.
Isn't it great not having to wear masks?
No mask, it's great.
Yeah. So first of all, John, before we get started, I need to sort of congratulate or salute audit committees in general, and particularly audit chairs, but audit committees. I just think that through not only pre-pandemic, but through the pandemic, they have done a terrific job. We both know the work that's involved in that, and they've done a good job. But as I say that, the world is changing. And in the audit committee purview as overseeing risk, we now have obviously a whole lot of cyber risk. We have the risk related to ESG, not counting human capital, reputational risk, operating risk. So all of a sudden, there's an issue for audit committees. How do we stay ahead of the curve on that? So just in a general sense, what are some of the challenges that you see for audit committees with respect to staying ahead of the curve?
Yeah. Well, first off, on your point on the job that audit committees have done, I completely agree. And their plates have absolutely been full these last 2 years especially, and their role in the capital markets has really never been more critical. So as I think about how can an audit committee be more effective, I would offer that what they would need to do first is to make an assessment of what oversight responsibilities, beside their core oversight responsibility, they have both the expertise and the time to take on. And that core responsibility, of course, is oversight over financial reporting, internal controls over financial reporting, and by extension, internal and external audit. And that has been so challenging these past couple of years because of the complexity of the volatile business and risk environment that we live in, caused by things like COVID, certainly the changes in technology of working remotely, and then most recently, Russia, Ukraine. And let me just delve on a couple of those in more detail, because each of those present pretty complex technical financial reporting issues. So certainly COVID, audit committees and companies and auditors have now for years been dealing with issues that we haven't dealt with regularly before, such as impairment of goodwill, perhaps going concern analysis, valuation challenges, business disruption caused by supply chain issues, monitoring non-GAAP measures, and that's been front and center for audit committees. And then Russia, Ukraine, right, brings other issues to the table that are newly complex, such as what losses or costs should be classified as unusual items on the income statement. Again, a potential goodwill impairment trigger. Long-lived assets being abandoned as companies exit Russia. Revenue recognition being disrupted as contracts change. And of course, risk and uncertainty disclosures within MD&A, all of which need to be considered by audit committees. And each of these areas, I didn't even mention technology changes and working remote and access issues. Each of those also has an element of what's the impact on a company's internal controls. And if there has been a material change in controls, making sure that's disclosed. So again, keeping that core responsibility of an audit committee front and center. Last thing I'll mention to your question, you mentioned cyber and ESG specifically. And of course, there's increasing demand for transparency and disclosure of cyber, ESG, as well as data privacy and human capital management. So on cyber, something certainly within the audit committee's purview is the recent SEC proposal on cyber risk management, on governance, and on the increased need for incident disclosure should those cyber events be material. Audit committees need to be keeping that certainly on their agenda. And then ESG, just 2 days ago, the SEC, on March 21st, the SEC issued its long-awaited proposal on climate risk disclosures, following Chairman Gensler's view that such disclosure should be consistent, comparable, and entity-specific. And for the first time, portions of those disclosures will be included within the financial statements. Some will be outside of it. But again, audit committee need to keep both of those items front and center as they think about their agenda.
So when I am familiar with audit committees and when I hear you speak, I think of the phrase that was often used even before a lot of these new things, which was called audit committee agenda creep, okay? And creep means that if you didn't know where to put some, it sort of ended up in the audit committee. And you just addressed just the internal control phase of that. That doesn't count all the other risk issues. So that brings up the issue to me of what should be in the charter, what shouldn't be in the charter, what should an audit committee oversee, and how should a company sort of make sure that they're covering all these topics. So what guidance would you give related to maybe the audit charter, which in the old days just said that the audit committee had the responsibility of overseeing risk. Nobody knew risk was going to look like this. But in the charter and the agenda, what do you see? What would you say, even though we know every company's different?
Every company's different, sure. And we have a chance through our Board of Leadership Center to speak to audit committee chairs regularly. And based on a recent survey that we did, it may come as no surprise that 2/3 of audit committee members that we spoke to over these past couple of years have reassessed the scope of their agenda and their oversight responsibilities. So you said every company is different and every board is different. Let me offer maybe a few items for your audience to think about. First is that we often see audit committee members working very closely with the NomGov chair and or the lead director to clearly align what oversight responsibility resides with the audit committee, what's in their purview, and what is best left for other committees. And in those cases where something is delegated to other committees, are there clear lines of responsibility drawn? And this we see is even more important when we see these risks that go across a number of committees. I'll take ESG as being the one that's probably most relevant. Certainly, NomGov has a role in ESG. Certainly, compensation does, and the audit committee does as well. Probably none so more than now with the recent SEC proposals I mentioned that will certainly be within the audit committee's purview. And cyber, you mentioned, is another one. Every board has cyber at the top or near the top of their agenda. And with the recent events in Russia and Ukraine, everybody has this shields up mentality. Boards are asking for tabletop exercises to be refreshed. They're asking for business continuity plans to be renewed. They're asking for a review of vendor and or third-party vulnerabilities. So where should the audit committee play in that? Work with the technology committee, which we see normally this handle, but again, focus on the internal control elements of their responsibility. And really what we advise boards is make sure that these clear lines of responsibility are drawn so that there's a process in place to effectively manage each of these risks. And when I say manage, I mean make sure the risks are identified, make sure they're assessed, make sure they're mitigated, and making sure that they're monitored. And then one last point on the overlapping responsibilities on those two examples that I mentioned, kind of diving further into that very quickly, is we think that's important so we understand who's responsible, audit example versus technology committee, for periodic risk inventories, for external and internal risk assessments, for who's monitoring enterprise risk management, who's responsible for internal controls. And even if a risk is fully dedicated to another committee, an audit committee really making sure that they're asking those core responsibilities, what's the impact on the financial statements, what's the impact on controls?
So I wish we had time to debate. We haven't even had the chance to talk about the merits of a risk committee.
Right.
Okay, which is mandated for financial services companies. There's a lot of value potentially for that for non-financial as well. But again, every company's different. It might work with some, it may not work with others. But I want to make sure we leave, and we've got about 2 minutes left. So I want to make sure that we leave our audience with some specific keys or questions that they should be sort of asking to make sure that their audit committee agenda is manageable and effective?
Yeah, so a couple things. So the first question I would offer, I talked a lot about the core responsibility of an audit committee and those very technical accounting and reporting issues that that is a core responsibility to deal with. So the first question I would offer is, does the audit committee, are they appropriately challenging management and the external auditor to understand the basis for a conclusion when there's judgment involved? How was reasonable judgment used? And most importantly, is there contemporaneous documentation that summarizes the company's conclusion as to an accounting matter? Very important when it comes to the SEC when and if asked about something. So that's the first thing I would mention. Second is, do we have the right oversight responsibilities as an audit committee? Do we have the right expertise? Do we have the time to handle an issue? And have we aligned it with the full board to ensure that everyone understands who's responsible for what aspects of what risk? And then last, I just touched on it briefly, but it's hard not to mention again the recent SEC proposal over climate risk disclosures. It's a 504-page document. I've not yet read every word of it myself. I've seen summaries of it. But questions to ask is, where are the gaps in the reporting right now? Because management will be getting information, some internally, some externally. And then not just the data that goes into it, which part of it will have to be assured by auditors or other third parties, but there's also a requirement to disclose methodologies and assumptions. So make sure that when you're going through dry runs of this with your company, you're asking not just where the data is sourced, but what assumptions is a company using, and what's the basis for those assumptions?
Well, I don't think it's any secret that the job of the board and the duties that they have continue to grow. So, John, I want to thank you for taking the time. This audit committee stuff, to me, is sort of the foundation for good governance. So I appreciate you sharing your wisdom.
Thanks, TK. Enjoyed it.
And that will conclude this edition of Diligence Inside America's Boardrooms. We hope you enjoyed the show. We'll be back again next week when we take another look at a critical topic to help you be a better board member or committee member. So we'll see you then.